Hi, and welcome back to the show. This is Joe Rabil with Rabil Stock Research. So I've been providing research for over 30 years, and one of the things that I've noticed in all my studies of technical analysis is that you can put 4 or 5 pros together, technical analysis professionals together, and a lot of times they won't agree on the trend lines. The trend line analysis, I think, in a lot of ways can be a little bit more subjective than I'd like it to be. So I'm going to show you a way, at least the way that I do it, that I think can be more objective and using a specific moving average to confirm. So let's go ahead and get into the agenda here. So I like to use an 18MA, and I get a lot of questions as to why I use an 18. Now 18, obviously you can use a 20 or even a 21. There's not going to be a significant difference between the two, but that specific time frame of moving average, I think, does the best job of helping define the trend in terms of a trend line. It'll really help you define the trend line, in my opinion. So I want to go through that and explain how I use the moving average to confirm the trend line, starting with price structure and then looking at the MA. And then what I like to do is look at the slope of the MA to help with confirmation as to trend change. So we're going to go through that, and then I'll go through the stock requests that came through. So let's go ahead and get into this lesson now. Okay, before we start, I do want to make mention that this was the chart that was on my StockCharts screen. I did not go looking for the perfect example. This was just what showed up, okay? Now, I did flip to the daily chart because I figured there'd be more signals, more flips ups and down, which is what we see on a daily chart where there is more volatility in terms of trend change, and I wanted to have that as an example. But I've got the XLF daily up, okay? I'm going to start on the left side and then work my way through. And what I want to explain here is how if you're looking at the trend, so if I were to just look at how this made a move down, a rally back up, and then a new low, and the moment we can make a lower high and a lower low, I can draw in a trend line from that point on, okay? Now, that would, in most cases, I think a lot of guys would just keep this trend line in place and extend it out and say until that trend is broken, we don't have any kind of a trend line break or anything like that. All right. So if you notice, when it started, when it rallied up and came down, it was basically the same. It was about the same slope as the 18 at this point. So when this goes to a new low and we draw it in, it really wasn't a bad trend line at that point. But if you notice what happened quickly after, we got a rally up and then a new low was made. So I actually recommend, guys, I'm teaching, and actually in my course I talk about this as well, to put in your zigzag so you can see the actual changes in the flips ups and down, the zigs and the zags, to make it easier to see when you're creating a new lower high and a new lower low. Because every time we make a new lower high, I want to use this as my anchor point for the trend line. Okay, so I don't want to keep this as the anchor. This was the anchor, and then we'd go back in time. Now I want to use this as the anchor and go back in time, and I want to look at this as being the high end of the trend line, and I'm going to draw it in like this. Now, why would I want to do that instead of keeping this one in place? Well, what I noticed over the years, if I want to look for a flip in the trend, like a change in trend, what I'm looking for is a 1, 2, 3. So I want to see so let's say that's the trend line and we're moving. We break the trend line. I want us to come back and test in some way, shape, or form and then turn up. So the 1 is the trend line, 2 is the test, and 3 would be coming up through this high. It's very much like Trader Vic talks about in his book, Victor Sperandio's book on trading. So I like that method for looking for a change in trend. Now, it's not necessarily a confirmed trend change because we've only made one higher low and one higher high. We really need another one to take place to really confirm the trend. But we want to know this in a specific time frame. If we know these in each time frame, it's going to give us a huge advantage. So I'm looking at this and I've drawn in the trend line. Let me put this back up. So I'm going to put the trend line back. the one that I would use. And if you notice, when we rallied up and tested, we broke right through the 18 and went to a new low. There was never the 2 and the 3. We never had a confirmed reversal. We only had a trend line break. Now, that trend line is really valuable when you can see that it overlays right on the 18. So I can see that the 18, and this happens all the time. If I draw a trend line in, it'll have the exact same slope and the same price as the 18 MA. The trend line will be basically the same. That's when I know I'm on the right track for a trend line. Now, if we notice, we went to another new low, so I can start over again. And I'm going to look at the prior peak here. And then, so if I hit a new low again, I've got to use this as my anchor point and then go back and not pass through prices. And by doing that, now I've actually got that same trend line in place. Okay. So this is the way I would go about doing that. Now, in this situation, we never really changed the trend, in my opinion, off the low, because we never really got a good test of the low and then a reversal back up. We made a move to the upside. And then if we notice what happened here, we can draw in a new trend line on the way up, because we had a pullback and then we went to a new high. And look at how that slope and price very similar to the 18. So I know I've got a pretty good trend in place. Now, also note that we came down and broke that trend line and then rallied back up. Now, even though we got back above the 18, we were testing this high, and the slope of this line is still rolling over. Okay, so if this trend were to flip back over, then I would say that the trend line analysis is getting a little iffy. But as long as this is declining, we get our test after breaking. So I'm going to draw on my trend line. We get a test of that, and then we come back down through here. We've got our trend line. Okay, we've got basically our 1, 2, 3 in place. Now we want to keep doing this as price is moving down. I could have a trend line here to start, but then notice how we made another lower high, and we did go to a new low here. And the reason why I would use this trend line is because look at how it overlays perfectly with the 18. You see how that slope and price are the same. And we break the trend line, and look at what happens. That's the 1. Now look at the 2, the test of the 18 that is now turning around. Okay, that did not happen here. We just went flying right through that trend line. Okay, now this time we actually held the trend line and then came back up through here, and that's the 3. If you notice, that coincides with the break of the original trend line. But I have more confirmation that the price structure has flipped, because I've done a 1, I've tested the low, and now I've turned back up. So if I have the price structure like this, I can see we're at a new low, went to a new high, came back down, turned up. I mean, I can see the price structure improving even before we break the trend line. And I get the confirmation with the test of the 18, which is now rising. Now let's keep going. We keep drawing in our trend lines, and look at what happens now. We draw on the trend line, and look at this trend line. It is basically the same slope and very close to the same price of the 18. So yeah, we broke it a little early and then went to a marginal new high after that. Then look at what happened, though. We get a little bit more confirmation with a firmer break, and then we rally up, and notice how this 18 is now declining as we test the high. Okay, so now I've got confirmation of a potential trend reversal as long as this line slope doesn't reverse back up. And it was only up for a day, and by the end of the day it was below it. And then we get a new low here. Okay, so now we just keep doing this pattern, and we can see that we broke the trend line. That's 1. Here's 2, which is the test of the 18. That's the 2, and now the 3 is coming back up here. And again, look at how this trend line, while not the same price, was essentially the same slope. If I draw in those and they're about the same slope, I'm good with it. I'm saying that's a good enough trend line. Okay, now the key here is notice how the 18 provides support on the test of the low. So, again, we break the trend line, and then 2 and then 3 would be coming back up through this prior high. Now, we'll do it one more time. We've got a trend line in place right now. again, look at it. It is the same slope and it's almost the exact same price as the 18. What I notice most times when I have a good trend line, when you break the 18, you'll be breaking the trend line at the same time. So right now, this trend is up until we come back down through the 18 and that line rolls over and it's tested. We have to assume the trend is up. Now, once we break the 18, so if we break the 18, it coincides with the trend line, but we haven't tested it yet. We are now in a transitional phase. We're no longer in an uptrend, but we're not in a downtrend. And what can happen during these phases, we can go sideways and then reemerge to the upside if we never get confirmation of the 3. So keep these things in mind when you're going through and drawing your trend lines. Sometimes I think, at least when I've talked to guys, they get a little confused with this. I think this 18 can help with this in a pretty significant way. All right, let's go ahead and move on to the analysis. Just briefly, my services can be found at rabilstockresearch.com. The services page has both the trend and momentum trading course information as well as the other services I offer. The goal of my service is really to help you become a better trader. I provide a lot of stock ideas and commentary on the market and sectors, but also there's a significant amount of education there trying to get you to get better at entries and exits and that type of thing. So if you have an interest, take a look. Let's go ahead and get into the analysis. I want to start this part by talking about the XLF, but having the multiple time frames up, because I'm sure I was going to get a question about this decline here and how we had the 1, 2, 3 and it only lasted a couple days and then it reversed back. And it's like, what's the point of that if a 1, 2, 3 only lasts a couple days? But I want you to understand that this took place right here on the weekly chart. The weekly chart had broken the trend line, come back and tested, and I consider that a 2 because it wasn't really a significant break of that prior low, and then rallied up and made the 3, and then we got our first pullback to the rising 18 week while this was pulling back. So my subscribers know that this is what I call like an opposing trend pattern. We're looking for the first sign of improvement on this time frame to get long on this pattern here. Okay, so sometimes a 1, 2, 3 to the downside doesn't mean a continuation. We're looking for failure here to get long. So I just wanted to point that out. Now it looks like we might be breaking this trend line on the daily chart, but we have underlying support at 35 from the 18 week, which is rising. And look at this, again, this kind of interesting. If we draw this in, we know that the trend line on the weekly coincides with the 18 week. All right, what I want to do is I'm going to talk briefly about the SPY, and then I've got a lot of questions that came in. I really like the symbol requests that came through this week, so I want to make sure I cover all of them. Now, let's just look at the SPY real quick. So this is sort of doing the same thing. Again, you can't even see the 18-day line because look at the trend line overlays right on top of it. It's just, I want to keep, repetition is the mother of skill, so I want to make sure I'm repeating myself. If we break that trend line, we have a lot of support from a rising 18 week, which again, if we draw in the trend line, you can't see the 18 week because they're the same. Okay, so we have good underlying support, but we probably do some kind of a pullback, and we're dealing with resistance from the 18-month line. Remember, this 18-month is key. This is the granddaddy of all moving averages, really, on the S&P. So we don't want to fight this. Actually, what we have is a fight right now between the 18-month and the 18-week, and until we get resolution there, it's really hard to have a big market opinion. All right, what I want to do is go through the symbol requests that came through, and I have one that I'm going to spend a minute on and give a little mini lesson on. So first off is MAS, and the question is, so this person bought this pullback here, which was a nice little entry for a swing trade. Now, when that took place, we were a little overbought away from the 18-week. The question becomes, is this next pullback an entry point? And I would probably say yes for a swing trade. Because I don't have ADX confirmation, I'm willing to play the MACD signals and the price patterns and all that for a swing. But if I don't get the kind of improvement that I really want to see on this ADX pattern, then I'm more inclined to just look for a move back up into resistance, not necessarily a big leg to the upside. The other thing is we're fighting a declining 18-month, so the odds are we're going to run right through that without some kind of a pullback. It does make sense. Now, the question was asked about the 40, or we're going to pull back to the 40. I actually would be looking for a pullback to the 18. I don't really care if these cross over. I just want to get this a little closer to the 18, and that probably ends up forming some kind of an opposing trend trigger on this time frame that sets up the weekly daily for a weekly daily swing trade. Okay, CCB. So the question, first off, the person recognized this big, strong bar. So we know the midpoint of this bar is a problem. So then the question becomes, is it worth taking this trade here? And I mean, I think you've got a really nice looking sort of pinch pattern here that you could try and trigger off the hourly. And if you got the right kind of risk, yeah, you could trade it, but I would probably be really nimble if I wanted to do that. The reason why I would pass on this one is, let's just look at this DI. So I see that red DI made a peak here, and then green made a move here, and that did not exceed. And he brought this up as well, which I love to see. Now, since that time, we've been pulling back, and we really haven't made a good pivot low. You could say that this was a pivot low, but here, turning up. But we still are making a significantly lower high. We really haven't taken out the red yet, all right? So from that standpoint, these are ways that if I have a big list, let's say I have 20 stocks and I need to narrow it down, these are the ways that I do that. So I would call this maybe like a B- type of swing trade. It's not, I want to stick with B+ or above. You know, I prefer the A's. If I can't find those, I want to at least look for a B+. I just think this is a little bit lower on the totem pole because of the DI action. Airbnb, really powerful move, and I've been bringing this up as a kind of a key level. So let me just point out this key level here, which we're getting through. And again, the person who asked about this correctly pointed this out. We've got good momentum. Do we want to buy this pattern right here? Well, because we have all this, I would tend to want to wait for a pullback. I don't really want to chase a pattern that's getting extended away from the 18-week line and still has some problems coming up. So let's look for a little bit better entry. In my opinion, that's the way I would handle it. Look for a little bit better entry this way, and I think that'll end up being a better risk-reward situation. So we've got a few of these industrials mixed in here. So I want to just point out a few differences that I see. So this looks more like a V bottom type of pattern. Now, I love that this turned at the zero line, MACD. Overbought, works down. Now, we know once we got there and there, we were going to get a rally off of 200. Big round number. We get the MACD coming down. We should be looking for a rally. Now, this rally has been okay, but it almost looks like a rising wedge to me in a way that just, you know, the momentum is good. Don't get me wrong. The momentum is really good, but it just seems like I'd like to get some kind of a pullback because this is declining. So good overall pattern, but let's look for a little bit better entry here, a little bit closer to at least these prior peaks up here. APD is a little bit of a disappointment. Now, it hasn't broken down, really. I mean, it has from a short-term standpoint based on the gap. We had this gap based on earnings, and this is why I'm so conscious. And when I talk about any of the stocks for my subscribers, I'm just constantly mentioning keep an eye out for earnings, keep an eye out for earnings when it's the case, because this really had a pretty nice setup. Pulling in, it was a strong stock, and you just never know with earnings. So now we get this drop, we get some momentum showing up here. I think this is on hold for now, but there is a lot of support it's coming into, and we're coming into the 18-month line. We're coming into this prior breakout area. I think this is going to turn into a trading range, probably more of a waste of time than anything. So I would just put this on hold for now. pH is really something that the type of pattern you really want to be focusing in on. This has my weight of the evidence, okay? Relative strength, ADX momentum, MACD momentum, Okay, you've got the monthly line, monthly 18 turned up now. We've got MACD in position, green DI breaking out again. There really isn't anything wrong with this except for one thing. It's extended. It's too far away and kind of too far away. We need entry now. We need a pullback. So if the market wants to pull back in here, I would be just sitting back, waiting and stalking this and waiting for a good entry. Now, if it comes in really violently, then it's not something I'd be all that interested in. But if it comes in the right way, this is going to be right near the top of the list of the type of stocks that I want to look for. Let's look at Moody's. So Moody's did the same kind of thing, didn't it? I mean, we came down to the zero line. We had a 250 round number coming into some support, and it got a rally, but it's a lot more muted. We've gone up, but we've kind of stalled out. I mean, the ADX is strong enough for this to make another leg to the upside, but not really going to be at the top of my list. So we're going to have to see if this can hold the 18-week. If it can do that, maybe we get a trade back up to this prior peak. We do have an island reversal up here, so 325 is a problem now. Not really something that I would focus a lot of energy on, especially because this is failing at the declining 18-month line. Now, Morgan Stanley is definitely a stock that I would be focusing in on, okay? Now, I want to point out that this has the price structure here. Nice move. This big spike here, I think, is hurting the ADX a little bit. So we have to take that into account. That's a bad quote. That didn't really happen. And so I'm questioning whether the ADX is really giving me true meaning here. I know the green DI is showing strength, and it probably would look better. We'd have a little bit better red DI in place. And so I'm still interested in this. We're going to need a pullback or a correction. If you notice, the stocks that I like the most need a pullback. And this is what I've been saying to my subscribers is that, look, we've got some pretty good and dynamic price action that looks a lot better than the general market, but we need a pullback in those stocks in order to buy them. Don't chase them. We're not out of the woods yet. Obviously, based on what the spider is doing and the price action today, every time we get a new inflation report, the market is either up or down. There's no real strength where the buyers have really taken over or weakness where the sellers have taken over. We don't have any real agreement yet. And so we've got to be picky about our entry points still. Okay, SMCI. So we've got a really strong trend. Didn't even realize, this stock doesn't even know that there was a bear market, all right? I mean, this is pretty impressive what this has done. We pulled back to the 18-week, which was rising above the 40, and then we had our opposing trend pattern, and we would have needed to wait for green DI to show up here on this pinch. This was crossing above, but green DI really is important because we went in the zone and came out and went to a new low. This is my entry trigger 4. So anyone who's taken my course would know that is what this is. We have to wait for a little bit more confirmation here, but it's something we'd be watching. Just based on how this is played out and the strength of the momentum here. So it's a little extended. You could only play this off the weekly daily, and now I'd only be looking for a pullback on the daily chart towards the 18 as my next entry. So that's kind of how I would go through and evaluate this. Okay, so Motorola is a little disappointing, frankly. And let me tell you why. Because this stock never broke down. You see how this didn't go down with the market. So this was really high on my list as a stock that I wanted to keep an eye on. Look at the momentum on the monthly. Now, what bothers me about this isn't the price structure. We got our 1, 2, 3. We come back to the 18-week, but look at what happened on the move up. This move to the upside did not generate any real strength in the ADX line, which is a little disappointing. Now, I'm willing to forgive that simply because everything else about this looks good. Look at the parallel nature of the moving average. Look at the parallel nature of the moving averages. Now, look at what's going on here. We got a little gap and pullback. We're starting to show DI here. You could play this pullback looking for a higher low based on this overall pattern. I think you could do this off the weekly and the daily. It looks pretty attractive from that standpoint. Okay, let's look at the LIT. This is the lithium sector. So another little mini discussion here. So we undercut this low. All right, now remember, we had MACD that was way overbought here at the beginning of 2022. It's worked off a lot of that overbought condition, and yet the sellers really didn't show that much strength. This is during a very ferocious bear market, and this, I think, held up pretty well for something that I would consider to be a risk-on type of ETF. Now we came down, we rallied up, went to basically a double bottom, and then rallied up and made a marginal new low, undercut that, and then rallied back up. Now during the rally, we got this green DI to start kicking in. So I would consider this a potential undercut and rally. Now go look at a stock like PLL. PLL looks so much better than this index, and it's I think an indication of sign that some of these lithium stocks are looking more attractive. So something to be on the lookout for here. This might not be the trade, but I would maybe go and start looking at some of these lithium stocks. Thanks for watching the show. My contact information is listed, and if you want to send a stock request, send it to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.